Hello and welcome back to episode 35 of the Nord Search podcast, where we speak to leaders in the power trading industry. So, if anyone saw my post on LinkedIn recently, I mentioned that I've been trying to get this particular guest on the podcast since the first week or two I set up the business. I had an initial list of leaders in the energy trading industry that I thought would be really cool to get on the podcast. So it's been 2.5 years in the making. So really excited to be joined today by Arne Weber, who is the head of power, gas, and emissions at MB Energy. So Arne, thanks for your time.
Thanks for having me, Patrick. Real pleasure, and I'm glad we finally made it.
Yeah, absolutely. No pressure. But yeah, look, it's great to talk to you. I'm sure there's people who know you and your background, but there'll be many who don't. So it'd be awesome if you could introduce yourself and give us a bit of a flavor of your amazing career that you've had so far in this space.
Of course, very happy to do so. So I think if you want to start day one, so to speak, of professional life for me, I did a PhD in theoretical physics at way back, and then moved into the world of power trading with RWE Supply and Trading, the big German utility. I started there as a short-term option trader, and I would say did many things along the way. I was there when the whole early days of direct marketing started for renewables. So when for the first time renewables were pushed into the market and there was an incentive given to not only live on the subsidies and kind of give the problem back to the grids, but to effectively manage these positions in-house. Back then there was a bit of a premium. This whole market started pretty much day ahead. These were the risks you could manage and optimize, and all the longer term risks were in a way covered by subsidies. And that's how I got actually involved in the whole renewable energy game, and all that followed. Yeah, and because I was kind of the green guy, or always involved on the green side of the asset spectrum, I was also very active in various projects integrating renewable energy assets from the group, then within the trading branch of RWE. So the way this company is organized, there's a generation side of things, and then there's a central market-facing hub, which is our West. And like I said, did many things there in the renewable space. And I would say the other thing that was always integral to my work there was working on automation, optimization, trying to, I would say, apply quant methods to generate upside and actually be rigid in your decision taking. And I mention these two things because it's kind of what I've done ever since. So I was always active in the space of renewables, and I was always active somehow trying to be rigid, quantitative, and in some shape or form automated with my teams. And my time in RB was followed by work for a fund manager in Hamburg, where I'm still based. So we set up a trading platform there to effectively manage renewable energy risks, which came from various projects and investments. And now I'm with MB Energy, which is an independent German energy company. And we can go into what we mean by that in a second, but I think that's kind of the short version of my journey to date.
Awesome. Yeah, thanks. There's a lot to unpack there, but so MB Energy, for those who don't know, or may be more aware of their former name, so that's Mabanaft. Is that correct?
Correct. Yes. So I think this is already pointing towards an interesting topic in itself. So our roots are in oil. That's how the company was started 80 years ago. You want to actually read a bit about this? There's a great book, Wealth for Sale, and we cover a chapter in that. So you can read a bit about it's really good. It's fascinating actually to now work there, and I'd read about it before. So it's fascinating how the business got started.
They were a trailblazer at the time, weren't they? In that book, yes. It showed that they were one of the first commodity traders.
Absolutely. I think it's. I mean, this was post-war, and the idea was really, okay, how can we supply Germany, post-war Germany, with fossil fuels, or effectively fuels? I mean, back in the days, I don't think fossil played any role. It was just about get energy in. So interestingly, now we're called MB Energy. Back then we were called Mabanaft, and of course the naphtha thing points towards a fossil product. But we're in a way going back to the roots of what is the company mission, and that is supplying our customers with fuels. That's really the core of the business and the DNA of the business. I would say fuel agnostic in the truest sense, which is part of the reason why we also renamed or rebranded. We are not just a fossil business anymore, or just an oil business. We're quite a bit more. And I think the rebranding is a reflection of that.
Yeah. I guess it'd be good to understand like why they decided to go wider than where their original roots were in oil.
Yes. So I mean, I mentioned it where we supply our customers with diesel, with heating oil, with bunker fuel, with jet fuel. So anything that comes out of a refinery, I would say, we're very active in that space. We don't run and operate refineries ourselves, but we operate all the supply channels. We buy wholesale, we have terminals, and we supply through our logistics value chain, then our end customers. But the market is changing, and the energy transition is, of course, a big driver of all of this. I mean, it's, I would say, partly enforced because of regulation and rules. There are subsidies, so it kind of makes sense at times to just jump on that if you want to transition. But what is very core to our operation, and I think it's something I've never seen in any company with this sort of level of dedication and commitment. I mean, everyone's talking about client centricity or customer centricity, but in our shop, this is really central. I mean, we actually do exactly what it says when you're talking about customer centricity. We have clients that just need different solutions now. So easy example is we have shippers that want to decarbonize or have to decarbonize. I mean, they now face ETS1, and there's effectively a cost of CO2. And this is going to arguably increase, or at least we know that there's going to be less and less emission allowances to go around. So if you're a shipper, you know that you're facing a significant risk from CO2, because that's ultimately a cost you'll have to carry until you have shifted to cleaner fuels or net zero fuels, so to speak. So what's the answer here? Well, we don't want to lose the customers. Our customers have demand. We listen to the customers. And even if the demand isn't right here and now, we know that, or we anticipate, I should say, that potentially people will come and ask us for different solutions, and we don't want to be there and then say, well, we can only supply you with one thing. And if you want the low carbon solution and go somewhere else, then the customer's lost, and that's something we don't want to do. And we want to be there for our clients that have been with us. I mean, I mentioned 8 years. Some of them have been with us forever, right? So we gotta provide them with solutions. So what could be an alternative is, of course, hydrogen or ammonia. These things you can use to operate vessels. They're quite well suited for it. I mean, depending on how you produce the hydrogen and the ammonia, it is a clean fuel, or at least it's blue. I mean, then there's this whole grading or color coding of hydrogen comes into play. But at the end of the day, I mean, it's clear if you burn an H2 molecule, it's just chemically impossible to produce CO2 out of it. It's only a question of how did you produce it in the first place. So long story short, we have a client demand. That client demand is changing. We are to some degree anticipating the change. We are driving the change also. We want to be on the front foot and offer the new products. And this is, of course, then something that as a group we attack and want to move forward with, jointly with our clients, I should say, to find the right solutions. Doesn't mean that if the clients demand, let's say, bunker fuel for a remaining part of their fleet, of course they get that from us. We're not going to tell them, well, no, it's only green. That would be, in our opinion, not the right way to do it. And I think it's also not sustainable. But on the long run, we see that the market is shifting. And if you go all the way back to, how does the value chain in oil start? I think it's also kind of logical why people like myself now pop up in MB Energy. The primary source of energy, or the primary carrier of energy, was crude oil for many, many years. I mean, this is for decades, crude oil was what provided the initial energy, and then afterwards you refine and everything, but the primary source of energy is crude. With the energy transition, of course, that is changing too, because these new fuels, hydrogen, ammonia, methanol, all this stuff that you can produce synthetically in some shape or form, is ultimately produced from power. And I think this is where my journey in MB starts. I mean, there's an immediate need for power the second you want to do something with cleaner fuels. And that's I mean, arguably you could say, okay, biofuels are a bit different because the energy comes from fermenting or doing something with organic materials. So that's probably the only thing which is a bit outside the power scope, but everything else has a very, very strong link into power. And that's I would say that was the starting point for me in the group.
Okay, interesting. So when you've been brought in and you've obviously got a focus on power, what does that look like?
Look, I mean, it's very simple things in a way. If you think about it, if you want to produce hydrogen, ammonia, you need power as an input. So you're effectively sitting on a big fat short power. And I mean, my favorite catchphrase at the moment is "power is the new crude," because what used to be crude oil that you refine, and then what comes out of it is, say, bunker fuel, to stay in this example. Now you take power ideally from, let's say, a windmill or a solar panel. You bring it into a synthetically produced hydrogen. You bring that in, add water, and effectively that's how you produce your hydrogen. So that was the starting point, and I think that the role there is simply to, okay, now we sit on a big short that simply wasn't there before. So how do you manage that risk? How do you hedge it? And quickly, we are back to my favorite topics, which is management of a power portfolio. It's a sign reversal for me personally. I was always on the long side of the power trading equation, and now I'm short. But it's kind of the same challenge you're facing. You need to source power, i.e., you look for PPAs, you look for longer term tradable products. And of course, I mean, my roots are in trading. So if there is a possibility to go into liquid markets and simply hedge and trade the product in the liquid tenors, then we do that too. And the solution we provide to the group is one that is then an integrated solution. So I mean, if you build a factory, you want to control maybe some of your basis risk longer term, and if that is illiquid, then you look into PPAs. If you can live with some sort of a shorter term risk, then you probably go into the liquid markets all the way to spot and even face intraday risks. And I think there's no right or wrong answer how you structure such a portfolio. End of the day, it's always a matter of price and how you do it right. And I mean, if you think about where the PPA world started, this was projects looking for financing that didn't want to sit on the long power position for too long. For us, it's kind of the opposite. We're very interested to offtake that risk if the price is right.
Okay, interesting. So is this a big focus of your desk? Like, obviously, you've got a remit of power, gas, and emissions.
Yes.
Like, what's the focus look like?
So I think if you want to jump to the other end of the spectrum, so I think that's definitely a big part of my day job. Manage inventory, and we come to, where does management of inventory end, and when do you start optimizing, and when does that turn into trading? I think that's for me the three steps in the trading value chain. But I would say day job, what keeps me busy, license to operate, reason to exist, is clearly there's a risk to control, and we need to be diligent to effectively not ruin all the hard work that goes into all these activities. I think that's something, also a bit of almost like trading style or how I think about trading. I'm the one facing the market. I'm the one who gets a huge responsibility, because if I mess it up, I potentially kill the business case for the entire business. And there's lots of people building factories, driving lorries. I mean, there's so many people involved. And if I mess it up, then potentially, all the upside that we hope to generate is gone. So I think this is the day job. Day job is make sure you've got the risk under control and you diligently manage your exposures. But you said power, there's also gas and emissions. Let's go to the other end of the spectrum. We still sell fossil product. Fossil product comes with emissions, of course. We directly through CO2 or all these other gases that then get normalized back to CO2, so to speak. So effectively, we are sitting on a CO2 short. And that CO2 short is another big part of my day job. So make sure that we meet all the compliance obligations, make sure that we, in fuels, it's a bit different from the power industry. Power industry people that listen to the podcast are probably quite used to the ETS regime and ETS scheme. So the way it works there is effectively if you produce power, from an asset of a big enough size, then you have to retire emission allowances for every ton of CO2 that you emit. And you need to track your emissions, you need to get it audited, and then once you've recorded your short for one reporting cycle, you need to have all the EUA allowances available and in your accounts and retire them, so that kind of nets out, and on balance you've bought enough tickets to justify your pollutions. And effectively, emission allowance is the nicer word for rights to pollute. So this is how it works in the power industry. In fuels, it's a bit different in the sense that, in power, whoever emits the CO2 is in charge of making sure that, or responsible for making sure that the CO2 obligations get covered. In the fuels sector, it's kind of the other way around. Whoever sells the fuel to the end consumer, so to the last user of the energy, is the one who's accountable for the CO2 emissions. So the burn is put on the retailer in a way, or the seller of the fuel. Which makes sense because, if you operate a power station of a certain size, you probably have enough people, or it's assumed that you have enough people that can take care of this sort of thing. If it was the same in fuels, it would mean that everyone that drives a car or operates with heating oil would have to do some sort of a CO2 statement and retire tickets. That would be awfully complicated. So you put that burden back on who sells the fuel. But the challenge, in a way, is the same. You sit on a CO2 short, and that needs to be covered. Up until now, that was a fixed price regime in Germany, at least. It was called BEHG, Brennstoffemissionshandelsgesetz, and the matching tickets are the national emission allowances. That system will be there now. Well, regulation is changing, so next year we'll have that system with a floating price. So for the first time, it is an actual CO2 exposure, floating price within a cap and a floor, but almost not worth mentioning because the market will further transition, and then in 2028 this will become a fully floating ETS version, ETS2, and then that is a full-on CO2 exposure, almost one-to-one comparable to the CO2 challenge that the power producers have faced for the last 15 or so years. So this is a huge chunk of my work, or I should better say of my team's work. We have a lot of, I would say, pesky groundwork to cover there, which means track your emissions, be very accurate on measuring all the fuel sales. Anything that goes through a tank needs to be reported. You need to do conversions from the respective fuels to the CO2 equivalents, put that into the registries. Sounds easier said than done because while fuels come with blending, some blends of biofuel trigger different CO2 intensities. So it's quite a complex topic to even determine your position. Once you've done that, the next thing you do is, there's a short, I need to cover that now. And then we're back in the world that I'm quite used to. So you're trading around a short position. How do you cover the short? How can you cover it long term? Is anyone willing to give you price certainty? These markets are super regulated. And I said it, there's just been a regulatory change. It should have been ETS2 starting in 2027. That got delayed. That means the German system applies for a bit longer. It also means that in all the other countries we're active in, the local national system also applies for another year. So it's hyper complex in terms of regulation. The markets are developing, so they're not quite there yet. We're not talking about a super liquid ETS market with EUA futures. That is growing, of course, and developing. We see increased interest, but it's still very complicated. And I think in terms of how much time spent, power is one thing, emissions is the other, and gas is almost in between because, we have activities in the US. We have activities in Europe. Our US activities are quite significant in terms of power and gas consumption also. So this is yet another topic, but I would say the gas part is easier or less different from power if you compare it to emissions, because power and gas always have a natural link. With the marginal assets often or most of the time being gas, even in terms of renewable energy, gas still factors in significantly into the power price and has a significant impact. So for me, at least, it feels like trading style wise and the activities you have to cover, gas is, I'm not saying gas trading is easy, but it's more similar to power. So in that sense, it's easier to combine power and gas, and then emissions is a bit of a slightly separate activity, it's a rather different beast.
This podcast is brought to you today by Nimble Alpha, who provides systematic market insights and are trusted daily by some of the highest performing power and gas traders at tier one energy trading houses. Nimble Alpha delivers clear, data driven signals across TTF, MBP, EUAs, German Power, Brent, and Henry Hub. They allow you to anticipate short term trends, time executions, so you can stay ahead of volatility. So, whether you trade spec, handle client flow, or manage risk, Nimble Alpha allows you to make sharper decisions with full transparency. In today's quant driven markets, it's the perfect overlay of your fundamental research. So, book your free trial today in the link below and get 10% off your first subscription. Stay nimble.
Yeah, interesting. And because you cover three, be interested to get your thoughts on like the state of the markets in general. Like, are they all trending similar, or is there big differences in what you've seen from the markets this year?
Well, I mean, we came from, I would say, one of the craziest episodes of my trading life. I mean, 22, 23 were absolutely wild, with massive macro drivers, right? I mean, we had the awful events in Eastern Europe, the attempt to invade Ukraine by the Russians. That, of course, really shook up the markets big time. I mean, the humanitarian tragedy aside, huge impact on our markets. Obviously, supply of gas shut down to minimum in almost no time, and hence very directional market also. So on the one hand, the massive factor of the supply dropped out, which then gives you a clear signal, let's say, of general direction of travel. And at the same time, lots and lots of noise. I mean, lots of crazy events happening and markets shaking all the time. There were, I would say, groundbreaking news, which would have been enough for 1 year, almost on a daily, at least weekly basis. So that added to the volatility to maximum extent. And of course, that's, again, I really want to stress, let's not forget why these things happened. And this is really awful, but for traders, that offered opportunities to do stuff in the markets.
Yeah.
So, i.e., there was volatility, and volatility gives you the opportunity to trade. So we saw a lot of interest all of a sudden again from different types of traders moving into the market, funds, hedge funds that saw the volatility and the trading opportunity. They obviously also saw that people are making lots of money now. So people moved into these markets. And I think whenever you have such a shift of market participants, that instantly changes the dynamics also, just because the trading style is very different. I mean, I mentioned it earlier on. For me, the day job is to cover a position. That's what I need to do, because that's what I need to keep the lights on in the company. I mean, I'm protecting the balance sheet end of the day with these activities. That's the end game. If I do nothing else, that's the one thing I absolutely have to do. If you come in and you come in only to speculate or to participate on volatility, the way you trade in the market is also very different. Probably you have a very different take on how long you can endure a risk, how long you want to sit on a position. So that I think added a lot of extra complexity. And of course, these people moved in. Volatility has slowed down, I would say, or calmed down. The markets have calmed down, and that is also a reflection of, let's say, the macro events, I would say, in the world to become a bit more tame. But of course, that means that there is now less to go around. I mean, there is less volatility, less opportunity, and arguably a few more players. So it's harder at the moment with outright activities or with speculative trading activities to make money. And I think that is what I see and hear. I mean, I would say it is harder. It's harder to take directional views. It's harder to participate on volatility because it's simply not there anymore to the same extent. So I think that's the sort of cycles which are not atypical for any market, actually. I mean, it's not every year is the same. At the moment, I would say we're going through one of these periods where there's just less volatility, less trading opportunity, and let's see how these new entrants respond to that. I have no idea, because the other thing is, of course, that one more big event that I don't know about. I mean, of course, that's why these are the black swans, that you just don't see them coming. But another one of those, whatever it may be, hopefully not a terrible tragedy like in in Eastern Europe again, then this could shake things up drastically one more time. And then I think the whole game begins again.
Yeah, like you say, it's cyclical, isn't it? I think we came to the end of the cycle. A lot of new players joined, like you say, speculators, big hedge funds that want to swing big and make directional bets. And I think we saw quite a few of these hedge funds have very similar trades, and especially in gas. And yeah, we've seen some big losses this year, or reported rumors of big losses, and also very recent rumors that some hedge funds have decided the market's not where it needs to be for them, and are leaving the market. So that, I think that was a prediction. I think people could see that come in, if they're here for big opportunities, and if their big opportunities aren't here, then they'll go to the next thing, or step out of the market for a bit, and we'll return when things get more attractive. So I think that's what we're probably going to see. So we've already started seeing that, but towards the end of this year, more hedge funds or more trading houses where it's not their core business, it's not in their DNA, will step out, and maybe that next year will look different to what we've seen this year.
And I think you touched on a very interesting point. You said the market are not where they need to be for them, and I think this is exactly it. I mean, if you are running a business where you promise your investors, your shareholders, whoever is contributing capital to the activity, you promise them a very high return, or the investor have a certain return expectation at least, because the capital comes with a certain risk appetite, then these markets are probably less attractive at the moment. And then of course this money goes elsewhere because it hopes for a better home in another place, and that's totally logical. With commodity markets, power, gas, emissions, doesn't matter which one you look at. I mean, there's also people that are there for, I would say, fundamental demand sort of reasons. I mean, as long as my employer sells fossil product that comes with emission obligations, we'll be active in emissions. As long as we have clients that demand clean fuel solutions, we will have to find answers to that, and that comes with most likely some sort of a short in power. So we have to be active, and this is, I think, very different, which also means that again, trading styles are going to be very different. I mean, one way or another, we'll have to cover certain positions. Whether we then want to double down on certain risks or want to take additional risks, that's a different question, right? But that's almost, I mean, we would also allocate risk capital from different pools for this. So it's kind of, well, to be seen, but I think I would expect that there is again a change in who is active. I mean, fundamentally active in the sense of driven by the idea of how much money can I generate from the markets.
Yeah, for sure. And I guess to have a dynamic market, you do need different kind of players in the market who have different objectives as well.
Yes, very much so. And I think this is, I mean, when I know this is close to your heart, but I think the way these markets have changed also, I mean, I obviously know the German market particularly well.
Yeah.
We started with the liberalized energy power sector decades ago, I would say. And back then there were a handful of big German power players. And of course they were active in power markets and they traded. But then over time, I mean, more and more people emerged. I mean, more and more, everyone knows that like Denmark has become this sort of algo hotspot, where I would say the interest in the market is interestingly not, I don't know, but I would assume it's not only driven by the fact that there is money to be made, but there is incredible talent. I mean, there's just there's this one university that seems to producing all these tech wizards that pushed into the markets and just forced everyone else to try harder, to work with algos, to be more automated. I mean, those guys really changed the way power is traded. And this is really driven by people, right? I mean, this is people that are particularly smart, have a different approach to solving the tasks or the challenges that the power market throws at us. And that is fascinating. I mean, it's, who would have thought, right? And there's more of the same, right? I mean, we have companies like MB Energy. We're always in oil. Now the energy transition as a whole forces us, or makes it very clear to us, that we have to be active in different commodities now. This is also a given, and we see that the oil majors are doing the same thing with different levels of commitment and different strategy, and we can all, there's all sorts of variants, but ultimately the big driver here is, okay, there is a shift from crude oil as primary carrier of energy to something else. And that forces many players to all of a sudden become active in power. And I think this is all playing into it. And then what you see ultimately is the price formation, which is a reflection of all of that. So all these different players and, many more examples of, I would say, how this changes. I mean, subsidies got taken away or got reduced. That meant we had funds pushing into power markets all of a sudden that want to offload certain long-term risks to get project financing. And that in turn meant that all of a sudden the longer-term tenors get traded and the whole PPA industry started. I mean, there's always the next thing following.
Okay.
Yes.
Yeah. Yeah, no, like it's fascinating. There's like you say, there's so many things happening in the market. It's ever changing. I think this year I've noticed a huge shift. I think this year in power is the year of the market makers. Like
Yes.
I think if you look at who's doing really well this year and how are they trading, there's a couple who are particularly impressive, and that's because they're market makers and they're a different breed of trader completely that the power trading industry's probably never seen before. Like these guys aren't fundamental. These don't really need to know the market as well as you do, but they have low latency trading capabilities. They are faster than anyone's ever seen in this market. They can trade really high volumes, and they can create a market within intraday. And I think that's obviously presented challenges for the firms that are screen trading still, like because they're not even seeing a price because these guys are millisecond trading. So I think that shows us like some new sophistication that's joined the market, and we've only really seen that this year, I would say.
No, absolutely. And I think intraday or short-term markets are particularly fascinating in that sense. So number one, I think you need less capital to be active. So you don't need to hold a position forever because typically everything's realized very quickly. So you don't hold overnight risk. Well, arguably 24 hours. So you can for maybe one night, but not many nights. So you can pretty much get out of any position very quickly just because it expires. So it's relatively capital light in that sense. Like I said, the understanding of the market is probably more important that you understand order book dynamics and you know how to interpret time series. I would argue that some of these particularly successful businesses, I don't even care too much whether it's power they trade or some other commodity with similar characteristics when it comes to trading style, accessibility of the market, liquidity. Yeah. So this is like you said, it's a whole new breed of people pushing in. And of course there were signs. I mean, I know that my friend Roland Pitts was on your first episode, and of course he was. I mean, he's a bit of an algo hero, right? I mean, he was an early mover on that, but it's a very similar story, right? I mean, I'm sure he doesn't mind me sharing that he came from a different industry. He had a different view on the power world. Came from banking, where certain assets get traded very fast. I mean, if X even 20 years ago was hyper fast, hyper liquid. And then these people came in and said, well, there's an opportunity here. And even better, he built a company that made it very easy, or not very easy, but at least easier to get into this. And then, okay, you could be a bit smarter about how you manage your inventory, how you get in and out of a position. So these smaller scale utilities that probably otherwise wouldn't have bothered or would have found it too hard, the entry barrier was too high, they wouldn't bother. And he opened the door for them. And I was very active in the shorter term markets at the time. When we were looking into this, there just weren't, I mean, when we started, there really weren't any tools. So you just had to come up with something yourself. And that, I mean, okay, this thing was growing. Now there's a whole industry out there. And because there are tools and there's IT support that you can just buy, it's quite a bit easier. And that has also changed the dynamics big time.
Yeah, because 2017 was when you were starting to be responsible for automated trading at RWE, and that was the start of the industry looking at automation. From what I can see, the first time I ever worked on an algo role within energy trading was in 2017, and obviously within other markets, fixed income equities they were starting algo trading in the 2000s, early 2000s, late 90s. So like I think they there's a lot of things that this industry could learn. But I'm interested at that time, 2017, like, and that 3-year period you had, like there must have been a big transformation of how you were trading in
For
that
sure.
period.
So I would say for me, it started almost the day I went into power markets. So I worked for a small team. We had the ambition to do as much with as little headcount as possible, simply to keep the cost base low and push as hard as we could. And also because we were convinced that by taking structured and I would say analytical decisions, our decision making on the whole would be better. So we came from a world where we had a huge asset portfolio and a lot of optionality and a lot of options also in the market to play with and different markets to optimize against. And we just realized, okay, this is actually pretty hard to find the best possible solution for a given point in time. And also we realized that we keep doing the same things over and over again. So for us, starting point, like I said, this was 2010 maybe even, that we said, okay, come on, let's see how far we can take this whole automation thing. So how can we determine our positions accurately, quantify all our optionality, quantify the strike prices that we sit on, quantify the options in the market, and different markets to play these options against, and just be rigid about our trading approach. And I would say, for me, that still ultimately is bread and butter. So be rigid, be accurate, and don't do boring stuff too often. So if you realize I do the same thing over and over and over again, it's not algo, it's not fancy. It's really just automation. So this is not clever, or it's just not doing too many manual processes. Also because I'm bound to make operational mistakes. I personally always prefer I automate things and then I let the machines do it, because then it's operationally more stable. So that was the starting point for us. And then over the time we kind of refined that and we're more and more rigid, more and more accurate. And this is then when the exchanges open up APIs. You could start uploading stuff automatically. You had interfaces to play the exchanges directly. I think that also has to be kept in mind. You need an exchange or a platform that gives you the possibility to place your orders automatically, to trade in and out automatically. If that is not a given, then you can't algo trade. That's just how it is. I mean, you need the platform. So I think I remember conversations with the various exchanges back then to how many orders can we send you? What sort of and very honest conversations around how much can your IT handle. And I think that was a journey for everyone involved. And of course, level playing field, right? I mean, everyone then gets to play with these things and everyone has an opportunity. But that was really the starting point. Go into this, be a bit more clever about how you upload your orders. Don't just slap in an iceberg and forget about it and then come back the next day and see how that one went. But be a bit more clever about how you execute your orders, how you manage your liquidity, how to trade in and out of positions without paying too much of a bid and ask spread. That sort of stuff really was the work that got us going.
Yeah, and I guess that you would have had to change the kind of skills that you were needing in the team.
Yes,
when you started focusing on those types of tasks.
Yes, and I think it's the way the job has changed. I think I remember that there were many screens and lots and lots of manual clicking and very stressful. I mean, for me, that would have been too hard, to be honest. I think it's just too many clicking activities. And I think the role has changed from being the pilot of the fighter jet to being the pilot when the plane flies on autopilot, but you're more like flying not one plane at a time, but maybe 5. I think this is because you can now all of a sudden you automate things, you make it more, but it's arguably harder because you really have to understand the stuff, which is very complicated if you've never done it to maximum extent manually, to then still understand what are the manual levers I could play, or what is what is really happening with my engine, so to speak. That's complicated. But the job in that sense really has changed that. Well, you're monitoring many things, and if there's a problem, you need to quickly jump onto it. But it's more of a monitoring and becoming active when required sort of task, where it probably used to be more constant pressure to do something.
Yeah. No, I've heard that quite a few times recently. That you're there as like more of a market surveyor, and then need to jump in when something's happening that might be a bit irregular.
Like I said, that's really hard because when there is a problem, you still got to be very fast, and you got to be very clever and very well knowledgeable about what is happening in my tool set. Where is there a problem? Is it data feed that I'm missing? Is it the algo itself throwing errors? I mean, you really then have to be very quick at bug fixing and finding the problem. Which, I mean, for me, once I've done a task manually many times, you instantly have a bit of an intuition where the problem may sit. If you only know the fast solution, that's quite a bit harder actually. And I think this is when I'm a bit old school when it comes to that. When we have new team members joining, and they're quick to, I mean, I really sound like an old man now, but when they're quick to jump on ChatGPT, or quick to use whatever tool to make life a bit easier, I'm always a bit skeptical, because I'm thinking, well, it's actually the manual process, the failing in the process of doing something manually, the fixing the problems, the really grinding through the details and figuring it out.
Yeah.
That's a large part of being good at what you do. I mean, it's really a very substantial part of, I don't know. I mean, you start sniffing at a problem and you have an idea where it may sit. And if you've never done these things manually, and if you've never really gone into the details, it's incredibly hard to develop this sort of intuition.
Yeah, when everything's given to you straight away without having to go through that exercise of learning and failing, and that's, most people learn from making a mistake, not when everything goes really smoothly. So do you advise newer starters to actually go and do more of the manual side to begin with?
I think it's definitely part of the educational journey. So of course we can take shortcuts, and I mean, it's a bit of a difficult one. I don't want to force anyone into, let's say, doing pesky tasks all too often, but I really think I would probably start differently, and I'd say if someone comes to the team, I typically try and not give them too much help at all. I throw a problem at them where I know it's too hard. And then the process of solving this problem with maximum effort and really grinding through it, that is something where I can give a bit of assistance, but it's really critical that you do this and you really go through the problems yourself, because in that process you will learn a lot. And of course, once you've done that with a smaller problem where someone from the team can still help you and support you, you'll be well equipped to then start tackling problems where no one on the team has any idea. But if you've never gone through this initial couple of steps where you actually solved problems manually with whatever tool set, I think it's a bit difficult. But I think smart people, you shouldn't tell them exactly how to solve problems either, because that's why they're smart, right? I mean, if I told them these are the steps along the way, then I kind of limit their solution space. With smart people, you shouldn't do that. You should give them the full tool set, full solution space. They can do whatever they want. I mean, within limits of compliance and so on and so forth, of course. But I mean, let's say in a professional sense, you can use any tool, you can use any method that works for you, data protection and so on, of course, clear. But then all the rest, you do what you need to do, and then give them enough steer and support and guidance so that you think they'll get to a solution. And I think that way people develop their own way of solving problems, maybe very different from my way of solving problems. But at the end of the day, if someone is successful with that or has the stamina to go through with it, and I think it's more a question of willingness to grind through problems than just being smart or well educated. It's more about, are you willing to put in the hours and to work hard and grind through the problems? And I think then you can be successful. And to your question, do I think people should do stuff manually? I think this is part of it, because if you try and take the shortcut and ask whatever bot to give you the answer, we all know, right? I mean, it sounds like a good answer, but if you then, I mean, it's easy enough to test that. Ask yourself two questions, whether you've really understood, and if you conclude the answer is no, then probably you should have done it a bit more manual.
Yeah, no, I've seen this approach recently, like with a few firms where they're hiring quants who've got, STEM PhDs to do like a quant role or an algo role as a researcher, but part of their like onboarding is they'll spend like 3-6 months on the trading floor, like actually trading, so they can learn what goes on in the market. That experience will help them become better at their job as a quant or as an algo, because they've actually fundamentally started to work out, oh, this is happening, I could automate this, or this is a bottleneck. This is, having that real world experience. I think I've seen a few companies take that approach, which I found interesting.
I think that makes a lot of good sense. We even see like in graduate programs, or I don't know. I mean, people, the job starters straight out of university, they go through rotation, see different parts of the business. Even if they ultimately know they want to be in trading or they want to be in a finance role of sorts, I think it's good if you understand the core of your business. It's easy to, you sit on the trading floor, you quickly become a bit detached from reality, and I'll move a ton here and a couple of megawatts there. But to have a feeling for, even in power terms, right? I mean, how does a 100 megawatt turbine look like? I mean, if you stand in front of one of these beasts, that makes you a bit more humble. And if someone tells you switch that on and off too quickly, it breaks. Well, that's what I meant earlier on, right? We're sitting at the commercial end of this whole game, and it's critical that we do a good job, but we also got to remember what we work for, who we work for. It's ultimately we're servicing a company, oftentimes assets. I mean, there are people that look after a huge machine so that we can play with it. And that is something you shouldn't forget. This is, if someone then comes, well, my algo tells me this and that. Yes, but I also got to have a bit of respect for the engineer who probably then has to suffer because of my actions in the market. And this all ties back together. So I think it's even more risky nowadays, where everything's so sterile or so fast in terms of how you can develop tools, algos. It's important to occasionally reality check. And I think doing stuff manually, going through details, trading manually, it really helps in that sense.
Yeah. No, that's really, really interesting, that perspective. Something I'm interested to cover is, like, in your view, obviously you've been in power trading for a long time. Like, in today's world, like, what do you think a great power trader looks like, and what skills and competencies and traits have you seen, and are there some similarities?
So I would say, if we start at the very beginning again, power, what is that? It's a commodity that cannot be stored. It is generated from assets of sorts. So number one, cannot be stored, only with complicated technical machines. These machines are batteries, pumped storage, hydro. Maybe a fast gas turbine could be considered flexibility. Actually, any thermal generation can be switched on and off. So it's a real asset in the sense that it has a strike price. You can optimize around that. So initial answer is you got to be an option trader to trade power, because you're managing many, many options. As the second you're involved in physical power, you're an option trader. So first answer would be you got to be an option trader to trade power. Now we know power markets are complicated. 96 quarter-hourly products per day, futures products, various countries, price zones, interconnector capacities, gas curves factor in. So all super complicated. Lots and lots of data. So probably you also got to be pretty good at managing huge amounts of data, and you got to have a lot of technical abilities. Now to understand all that data, so number two, probably you got to be a data wizard. Number three, well, that's a lot of information to take in. So you've got to be very analytical about how you go through this and combine all the information and draw the right conclusion. So maybe number three, in terms of who do you need to be a good power trader? You got to be very good at quantitative solutions. So maybe you got to be a quant. It's driven by renewables. There's long-term financing needs. People trade, especially PPAs, complex structures nowadays. They offload risks. So in order to understand these players, you got to understand why they trade in a certain way. You got to understand how they price up their contracts. So there's a massive need for complex pricing, but maybe even origination skills are required if you want to be active in that sector. So probably you also got to be an originator. And I think I could probably continue the list for a bit longer, but my point is there's a lot of things you got to be good at. And it's almost a personal choice of the individual, and a choice and a question of strengths, where you want to in which rabbit hole you want to go into. Maybe, or you decide, or you're lucky enough to get picked to run one of them teams and do a few of the things, maybe at a higher level. You're never the expert, but you manage a team and you run the team, you put the individuals in the right spots so that they can, deliver maximum performance on their individual strengths. But I think this was a very long answer to a short question, but it's kind of there's a lot of things to be done. There's many opportunities. The ideal power trader, I think, as such, doesn't exist. I mean, not you mentioned that there's cross commodity opportunities. You got to understand many other commodities. So there's lots and lots of angles you can play. The thing that is striking, though, for me is that successful power traders, at least the ones that I meet, they all tend to be pretty smart. So and I think it makes sense, right? I mean, there's a lot of complexity. To understand complexity, it helps to be clever. So I think there's genuine alpha from being smart. And the other one is, frankly, hard work. This is not a commodity which makes it easy on you. I mean, it's not like you can, some people probably have that gift. I'm unfortunately not one of them that could just come in and know where the market moves, and they have this sort of super strong natural intuition, where I would again argue that this comes from experience, so there is hard work involved, just gathering the experience. But anyway, I think if you want to really strive in these markets, it really helps to work hard, to get your basics in order, get the bread and butter stuff really under control, and then add to that with some cleverer strategies or ideas. But I would say the hard work and being smart are probably the key features, if any.
Yeah, look, thanks for that pretty clear summary. And I don't, like you say, there's not really a short answer, because there's so many different skills that a power trader has, because it is very complex. Some people say to me as well, and I've asked this question, because I love to ask this question, about being very curious, like in your personality, and someone that likes to go deep into topics, and someone who likes learning constantly new things.
Yes.
Would you agree with those traits?
100%. I think it's almost when I say clever, I think it's probably, that's too blunt a statement. I think really what it takes is that, right? A curious mind, someone who's willing to go through details, tries to understand. I mean, there's huge amounts of complexity. I doubt anyone really understands everything, right? There's so many wheels in motion. It's really hard to combine them all. And really, you can only try and approximate and try and get to as close to the solution and the right answer as possible. For me, when I said hard work is the other one, for me, it often, most of the time, actually doesn't feel like hard work. I really enjoy it. I love the complexity. I love that it's hard. I love that it's stimulating. There's something happening all the time. There's always new stuff coming. And it's always, for me, that's fascinating. I like that. So it's actually very easy for me to work many hours, because I actually enjoy it. You don't have to force me to do this. I mean, I like spending my Saturdays and Sundays looking at headlines and looking at what's happening, because it's just genuinely interesting. So it's very easy to stay engaged, curious, and work hard, because it doesn't feel like hard work. It's actually quite the opposite. It's rewarding in itself.
Yeah, good. So I think you're having that passion for it and interest in it. It's gonna definitely help you.
Yes.
Because I guess there's easier markets, less complex markets to trade otherwise.
Absolutely, and I think this is really true. I mean, if you want an easy life and you want to, well, then power is probably not for you. I mean, there is. But I'm not saying that it's easy to make money out of other commodities or other asset classes. Not at all. I mean, I actually think you always need some sort of alpha. You must be doing something cleverer than the rest, or something, have some edge, better understanding, better information. Something must give you alpha. Otherwise, maybe you have better capital that finances you, and you just have more patience than the rest of the market. That could also be it. Then that you just have deeper pockets that can give you alpha. But at the end of the day, you got to have something to give you edge. And I think in power, it really helps if you understand. And that's of course one that, with good understanding of technology, good analytical skills, you can achieve many things. Which is, I think, to our earlier point, that's why these new players come into this. You can achieve great things if you bring the right skills up.
And I think it's because it's ever changing. You need to be adaptable as well. Like, you can't just be very good at trading one way and say, that's me now, I'm gonna do this for the rest of my career and have a great career. Like, if you stand still, you fall behind. And I think there's lots of regulatory changes that have happened in intraday power, and that has hurt a lot of people I talk to. Like, they had certain strategies that did really, really well in certain countries, and then regulatory changes happened, and it's like, okay, well, that's gone now. and the order book data that we had doesn't really matter anymore. So we need to be innovative. We need to come up with new ideas, and some people are better than that than others. And I think that's just a key skill that I've learned people need to have, because you need to be adaptable to change, because change
100%.
constantly happens in this market.
No, 100%. I think this is so true. If you think about it in power now, it's quarter hourly auctions. It's the products change, the rules of the exchanges, so to speak, change. The regulation changes, subsidy schemes change.
Yeah.
I mean, and on top of that, you have macroeconomics, which also changes. I mean, different import-export structures. A new president in the US that does something to LNG imports, which in turn affects what happens with power generation. I mean, there's so many things that drive these markets. So I think you're absolutely right. The second you stand still, you're going to lose edge, and you'll lose P&L and market shares and God knows what. So it forces you to be active. You need to run faster every year to keep up, which of course is, well, you could say that's bad. I think it's stimulating. It forces you to do stuff. I'd be bored if every day was the same. So that's good.
Yeah, for sure. I think that's a really interesting topic to cover there. But how does it compare? You're looking at gas, you're looking at emissions. Like, is the skill sets and everything we just talked about there, is it any different compared to gas or emissions?
I would say power is probably the most technical of all the commodities, especially intraday, shorter term. It's super technical. It's super algo driven. I mean, these markets are hyper liquid, or not hyper liquid, but there's certainly lots and lots of trading. And I think this is by nature of the commodity, because it's not storable. There are batteries, but they're very limited. So I think we have the huge challenge now in power that it's increasingly driven by renewables. These renewables are very volatile. At the same time, you have more and more storage coming into play. The grids are at the edge of what they can handle. So I think this naturally bodes well for anyone that is super automated, super technical, super fast. I mean, there's a need for this sort of speed. If you think about emissions, yes, there's a liquid market, but the spot auctions happen a few times a week, and then you can put the tickets into a registry account. You retire once a year. So whilst you obviously want the positions covered, there's the need. If I think about a power desk, every day there's a scheduling obligation. You need to send a schedule to the grid operator with your auction bids. You need to make sure that post-auction, everything's in good order. Your schedules are nominated accurately to the last kilowatt. You need to reschedule every time you do an intraday trade. So there's a lot of technical challenges which force you to run shift teams, which force you to have schedulers that really know what they're doing. There may not be any mistakes, so there's no time for back and forth. So this really forces you to be very, very technical. Gas, similar if you do physical gas, of course, but I would say not quite as brutal, because there's a bit more stretch in the system. Emissions is, in that sense, relatively slow or forgivable in the sense that, it's you have the compliance cycles define how quick you really need to be. And of course, these things get a bit more busy when people do the last checks of their balances and realize, I'm missing a ton, I've got one too much. Okay, then you offer it, but it's not every day. So this is, I think, the big difference. And of course, emissions is arguably the most regulated and most complicated one in terms of constant political changes around it, which has opened a whole new, box of problems that you then, I mean, I'm obviously always lobbying for give us the most stable political environment so that we can focus on the markets and let the markets do their thing. Every time you disrupt such a market, it shakes things up pretty badly, and then you need to adapt again. So that's the challenge there, to be on top of the regulatory changes. And at the same time, it's also a very nice market because it's directional in the sense that if the regulators keep doing what they promise, you kind of know where the supply is going. And then it's the question of, how do I optimize? Do I invest in CO2 savings, or how's the market going to invest into CO2 savings? How's the demand going to change on the back of that, and so on and so forth. So it's I would say, a bit different in terms of trading style.
Yeah, no, that's interesting to break that down, because I'm not as aware of emissions as I am of power. It'd be interesting as a leader now to just move on to your leadership philosophy. And obviously you have a team. Like, how big's your team right now?
There are 8 of us. So I think it's a reasonable size. We don't do short term, so we don't do intraday at the moment, not ourselves. So that of course makes it a bit easier in terms of running on a smaller team.
Yeah. But you've run obviously teams for a long time. So it'd be interesting, to talk about your leadership philosophy.
I think, we touched on this earlier on. I think what I like to do is bring in smart people, give them sufficiently hard topics to work on.
Yeah.
Not so much that they drown, but ultimately give them freedom and room to maneuver.
Yeah.
And then they need to sharpen their own tools and develop their own skills. I think I'm really a firm believer in people developing their skills that way and grinding through problems that way for the reasons mentioned earlier. I think by watching YouTube videos on woodworks, you don't become a carpenter. You need to somehow do it. And then you get a feeling and an intuition, you become a valuable team member. So that's one. I like to challenge people, smart people. I like to hire people that are willing to face that challenge. And I think I think I read this about Steve Jobs once. He also pretty much let people do their thing and tried not to interfere too much. I'm a bit like that. Of course, there's corporate structure around, and you can't not everyone can work their hours. I want to have the possibility to speak to my guys and make sure that we have sufficient interaction. But with all that freedom, there's one thing I'm pretty fundamental about, and that's accountability. It's really a huge one for me, because if you give freedom, I think the only way to control the madness then is that people are clearly accountable. So if you allow people to solve problems their way, it needs to be still clear who solves the problem and when is the delivery of the problem expected. So when do you have a solution? This doesn't mean that if, let's say, person X gets something to work on, that they have to do it all on their own. Quite the opposite. It just means that if I want to know status about project, whatever you're working on, I go to that person knows, that person is on top of it, knows where we stand, can communicate clearly deadlines, can communicate clearly whether things work, or proactively comes back to me and to the rest of the team to communicate, I have a problem, I need help, I'm going to deliver, yes or no. That needs to be always clear. I think accountability is the ultimate one for this, which is why, and I stole that concept from IT colleagues at the time, there's one name against every problem. One name. There's never two. I never want this sort of situation where I look at two people and then they go, I thought you're doing it. No, let's never go there. And again, it doesn't mean that this one individual is the poor sucker who has to fix it all. With this coming back to how do you fix your problems? I mean, some people are super good at organizing and managing and finding solutions, maybe by just asking. I mean, I have a guy working for me who just knows everyone and he just knows who to go to find the solution. I wouldn't even know where to start. So that approach of solving the problem wouldn't be my first way of doing it. I would probably grind into the problem all the way myself and try to find all the information. Different approach here. Totally works. So I'm not going to interfere. I still want that one individual to get back to me on the status and the solution. So I think accountability, really, really big. And it's I mean, there's a lot of research on this stuff also done. I mean, from military to research, there's lots and lots of people that run structures and teams on the back of that.
Yeah. So that are your core principles.
Very much so. I think this is a big one, and maybe although it sounds like a bit of PC sort of thing to say, I think diversity is also really valuable to leadership. Not because it's, let's say, morally the right thing to do, or I mean, it obviously is. Equal opportunities for everyone. And I subscribe to all of that, but again, terrible thing to say, but it also is economically the right thing to do. If you have everyone thinking alike, if I hire only mini-me's, I will get answers which are identical to my answers. And there's not going to be much challenge. I mean, these people, I may be very happy and have a super easy life. It may feel like everything is running smoothly because I never see my blind spots. There's no one that goes, but this is, you've not thought of this. If there's like 8 mini-me's, I'm not even gonna notice that there is a problem. If I have a diverse team with different backgrounds, different education, different cultural background, different languages, it shakes things up so much that you instantly your solutions improve. So almost like in a portfolio management approach where you say, well, I can manage risk by diversifying. I also like to diversify ideas and thinking. And if you do that, that really helps your teams. And it sometimes means that you probably say, well, but he doesn't solve problems my way. He doesn't think about problems the way I do. That for me actually has become a trigger point where I think, interesting hire. Let's go deeper into that. I mean, again, it still has to be some sort of a fit, and there needs to be a certain baseline in terms of we all agree on certain principles. And if you think you're the only one who's not accountable for your problems, then we have a problem. Clearly, that's not going to work. But the other stuff, I think diversity really helps.
Yeah, no, absolutely. I think, like you say, it's making sure you don't have the same blind spots and less blind spots.
Yes.
Awesome. So I think something I'd like to cover, and it's just a topic I'm very interested in at the minute. So get your views on it, and maybe, you know, as MB Energy, is it something you're thinking about strategically? But like with AI, obviously the world we're in today, you can't get away from it. It's in the news every minute. But something from our industry that we're going to see, if not now, is the power demand to go and do what AI or all the big tech companies want to do with AI. It needs more electricity than we've ever seen ever before.
Yeah.
And I'm seeing that spoken about in the US, but is it being spoken about in Europe as much? Do you think, how far away are we from it becoming a priority in a business like yours? Interested to get your thoughts.
I think it's true. I mean, US are I would say ahead of the curve, at least as compared to Europe on this. It's a different situation in terms of where the energy for this comes from already. I mean, US are arguably long energy. I mean, they've got a lot of gas. It's relatively cheap, so it's probably a bit easier to build this sort of infrastructure or a power backbone for this. At the same time, we also see massive growth of new renewables. So long term, there's going to be there's going to be a huge supply of power at least certain times of day. We have this whole challenge of it's an energy only market at the moment, so capacity doesn't really get rewarded. Few exceptions, I would say, and you can monetize some of this in the flexibility markets or intraday. So there is some upside to be generated, but long story short is really there's the energy problem as such is a different one in Europe already. And I think what will be interesting to see is how grids respond to this also. I mean, we have in Norway is my favorite example. In the north of Norway, power is super cheap. There's a lot of power being generated. The power gets consumed in the south of Norway, but there's not enough interconnected capacity. So you often see that in north of Norway, the price zone is quite a bit cheaper than the south. So I'm almost wondering at the moment, okay, is there going to be some sort of a trend where at some point all the data centers are just going to sit where all the cheap power generation is?
Yeah.
And that could really change these markets quite a bit. So then it's almost like, you know, in the early 19th century where everything, well, there was coal mining in the west of Germany. The iron ore got transported there because it's like the lightest thing to carry. So, okay, I mean, the whole steel industry started growing there. Is there going to be something like that for AI, data mining, data analytics activities, data centers, just to close to wherever the power gets produced at very low cost? I mean, you know, almost like there was a point in time where there were discussions around offshore Bitcoin mining, just because you could that way burn the energy relatively quickly, and more or less don't feed it into the grid. So I think there's a lot of options yet to be explored. The interesting part is, again, if you think about, let's say, if you go wild and say, let's put all the data centers into very remote areas, can you get people to move there? Because a few people will have to be there. I think that's going to be for people like yourself an interesting challenge. Can you move someone into the north of Norway where it's very dark for a substantial part of the year? So to be seen, I think, but that's the sort of challenges that will come with that. But I would agree that at the moment, the US are really leading the pack here, but they have it a bit easier in the sense of power, of energy, more broadly speaking, being cheaper there.
Yeah, no, so that dynamic. Yeah, I'm also reading like some states now in America are not exactly happy about data centers coming to their state because it increases the electricity prices of the normal person because of the huge demand that these factories are obviously needing.
No, and that's
I found
true,
interesting.
Right? No, totally, and I think this is what will happen. I mean, there's going to be some sort of cannibalization effects also on the. I mean, the second you build the data centers, it's going to push the prices up, and then you'll find a new equilibrium state. These things, of course, move relatively slowly. I mean, it's not like you build a data center and then the next day you move it to the next location. So that's a bit hard to do. but I mean, who knows? Maybe there will be containers with I don't know how these things work technically, with just lots of computation power sitting in one place, and then you move them to wherever the power is the cheapest on a given point in time. I mean, I'm aware of projects which consider this for batteries, so that you move them around and bring them to whichever grid location you can charge the cheapest, and then you see the biggest potential spreads to be earned in shorter term power markets. I think that we've not seen anywhere close to where this may go. I think the fascinating part about this is how quickly it evolves. I mean, if you think about, 5 years ago, AI videos or the resolution of these videos, and they look totally artificial. And nowadays you look at an AI video and it looks like the real thing. So I think this is the demand that will come from this, and the possibilities. I mean, I was saying, you need to do things manually and learn manually and all the rest of it. But clearly, these tools will play a super significant role in any industry. And I mean, this is going to change the world big time. And I really think we've not. I mean, this may be a revolution comparable to using your old mobile phone, which could be used for phone calls, and now this thing rules my life. I mean, it just is, I've got everything on this. So I think, who knows where AI will go, but I think it could be a revolution as big.
Yeah, well, I think it's going to help the power trading industry anyway, that's for sure. I think originators in America have never, ever been as much in demand as they are today. Because the whole landscape's changing, and I think it's going to present opportunities for power trading businesses, power traders in general. I think for the industry, it's exciting.
100%. I really think of all commodities, power is just the most fascinating. It's a derivative commodity in the sense that a lot of others factor in. I mean, there's gas, there's coal playing into it, export capacities, LNG. Emissions is probably as exciting because it has different complexities, but I mean, power 100% will stay huge, and emissions, just because the planet is getting hotter and hotter, we need to do something. I mean, don't get me started on people saying that climate change is not real. I get a bit angry when I hear these things, but I think these are the two things that will really certainly keep me busy for the rest of my life.
Yeah. Well, I completely agree on that point on power trading. But look, Arne, I could talk to you for a couple more hours easily, but I know you've got to carry on with your day. But really appreciate your time. We've covered a lot of topics there, and that for me was fascinating and certainly worth the wait. So thanks again, Arne.
Thanks, Patrick. Real pleasure to be on your show. Thank you.
Awesome. Thank you.